Hey everybody, Smart Silver Stacker here. Welcome to another live stream. Let's talk about gold and what has been going on in the gold market, because the action in the gold price has been very volatile and very interesting from the standpoint of a gold or silver stacker like you and me. So let's zoom out here real quick and take a look at this long-term chart. And you can see we've got a very notable formation forming here. Cup and handle, we've been talking about this a lot lately. Last night, of course, zooming into the daily chart here, we can see that gold surged up in the overnight trading to a record high price. And I just want to say a hello to everybody popping into the live stream there. I see some folks in the chat. Hello. Do me a favor, put a 1 in the chat, put something in the chat, help get this algorithm fired up for this video and help get this information out there, because I think it's important that people be aware of what's going on with the price of real money, of gold and silver in this economy. Now, the first thing I want to note from this kind of a move, so we're going to zoom into this daily candle here, and you can see what an extreme move it was, with gold going up to 2150 or thereabouts, new all-time record high in the overnight last night, but today crashing back. Now, I did point out in the live stream yesterday discussing this spiking price of gold that if we didn't see a confirmation of this today, if the price of gold closed, somewhere below 2100, that this was not really a valid breakout. And that's exactly what happened. The price of gold got smacked down today. Once trading opened here in the US, surprise, surprise, the price got absolutely hammered down. Right now, sitting at $20.35. So $100, more than $100 below that all-time high that we saw in the overnight trading. Now, there's a few things I think we can take away from this. First, just think about how volatile this has become. I mean, this is one of the deepest, most liquid markets, the gold market here, in the world. It's trillions of dollars. So when you see swings like this, $100 overnight, in an asset that typically is viewed as, a stable store of value, not that volatile, it's indicative of just how volatile the situation has become overall, both in the economy, geopolitically. I mean, there's a number of factors here that are driving investors into gold. It's the reason that it just hit a record all-time high. But let's talk about this pullback, because, it seems to be imparting quite a bit of negative sentiment in the space. I mean, just judging from what I'm seeing in the comments of videos and the overall tone on social media and the interwebs about this move that we've seen in the price of gold. A lot of negative sentiment, people seeing the price hammered back down, kind of saying, oh, of course it was, But I think what happened here is you've got, first of all, perhaps investors who got in at one of these previous highs where we had touched kind of around the same level, because this is the fourth time we've approached this $2,100 level. So perhaps investors who got in here, or here see this as an opportunity to get out, because, of course, gold, it's been a bit of a wild ride. I mean, just think about back in October of this year, just a little over a month ago, we were looking at gold prices around 1820. So to go from 1820 to a gigantic surge to over 2150, it's a huge move for the price of gold. But look, I mean, when you see a pullback like this, I wouldn't necessarily take this as a bearish sign. I mean, I view it really as just kind of one last chance, because I know when I looked at the price surging to all new all-time highs last night, hitting 2150, I thought, well, I guess I'm almost getting priced out of gold. And I sure wish I had bought a lot more when it was down around $2,000 or around 1,800. Maybe some smart traders purchased at these lows and, managed to get out the top. But mostly I think it was either investors who are not interested in holding real physical metal. I don't think too many stackers were selling. I think it was investors who had paper positions, because most of the gold market, the gold spot price is determined largely in paper markets. There's not that much physical metal that actually changes hands that drives the spot price. And so, it's people taking profits, perhaps people being enticed by other asset classes, or even the yield on bonds or cash, wanting to get out of gold. I doubt very much that very many stackers were selling at this high price. And honestly, I mean, you really didn't even have much chance, because what are you going to sell your physical metal on a Sunday at, 11 p.m.? It's probably not going to happen. You're going to wait until the next day, and if you did, of course, we already saw the smackdown. But this is a chance to get back in to these metals at a lower price. And I mean, listen, the price could go lower from here. Certainly, I mean, you look at this chart without invalidating the cup and handle formation, you could see a pullback all the way down to 1600, and that still wouldn't invalidate this pattern. But I think that's highly unlikely, a very unlikely scenario, given just all of the negativity that we're seeing in the economy, whether it be the fact that the banks are on the verge of collapse. Many of these small regional banks are insolvent. The Bank Term Funding Program, the emergency lending facility from the Fed, is at near record highs in terms of its utilization. Consumers are tapped out. Credit cards are at a record high. Defaults are at a rising level. So, the likelihood that the Fed is really going to need to print a lot of money here over the course of the next year or so, the anticipation of which, of course, is what is driving gold to these new higher prices. Not only is it bad, I think it's probably a lot worse than many investors realize. A lot of people are still banking on the soft landing idea. And when that is, revealed to be the false hope that it is, it's going to become clear how much money the Fed is going to have to print, how much currency. And I believe that we will see gold breaking out of this pattern. But it might not happen, as I mentioned in yesterday's live stream. Probably going to have to wait until the Fed actually begins to ease until that happens. So, what will we see with gold moving forward? Well, could see a bit more of a consolidation, probably towards the top end of this range. In fact, I suspect that 2,000 may be the new floor in the price of gold, and that's kind of what we're establishing here with this consolidation. You got to remember, the daily moves in the price of gold, certainly they can be exciting and you can take something away from them. It's notable when gold does something like hit a record all-time high, but daily price movements are largely unpredictable, and trying to time these markets is kind of silly, I think. Although I will say that, when you see a pullback like we saw today, it's typically a good time to buy. I don't like buying when gold surges by $100. You notice I didn't say last night that I was considering picking up any bullion, but now after today's pullback, I kind of am, because we have seen a pretty good drop in the price of gold and silver. And I think, around these prices is more where I would be looking to add, especially silver. Gold, of course, is near its all-time high price, which was just set last night. Silver is still very cheap, and we're going to talk about that in just a moment. Of course, you do want to add some positions, hard, physical, tangible assets. You want to get some more gold and silver after this pullback. Make sure you check out today's video sponsor, sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. You can take a look at the gold to silver ratio here. This is a very long-term chart. This is over at longtermtrends.net. And this is a pretty cool chart, actually. You can expand this to go back to like 1700. But of course, it's not that interesting of a chart for the first couple of 100 years because the gold to silver ratio stayed around 15 to 16. But I've got it zoomed in here starting in about 1964 because that is a good time to consider the dollar in its current form relative to precious metals. Of course, 1964, the last year that we had silver coinage, and then 1971 here, that was the year that the dollar convertibility into gold was removed by President Richard Nixon. Temporarily, of course, as he told us, but I think we all know how that worked out. That turned out to be a pretty long temporary suspension, but that's why I have it zoomed into this period. And yeah, Robert in the chat there, it was a big pullback, and that's exactly why I would consider adding two positions at this point. I like buying on days when there's a big drop in the market. I mean, you get metal on sale. It's the same metal it was the day before, but now you can get it for, several percentage points lower. So why not? Now, right now, you can see that we're at 81.26 in the gold to silver ratio, and that's very high historically. You can see that there's only a few times really on this chart when the ratio even exceeds 75. So we're in one of those periods right now. We also had a couple of pops in 2008 and 2003 where it got a little bit higher than that. Of course, the metals were very cheap at that time period. And in the early 90s, we had an extended period above that. But really, with the exception of those, and then the pandemic spike up that we saw here, and this was just ridiculous, of course. When it got this high, this was a screaming buy for silver when silver was down around $12, and the gold to silver ratio got to an all-time high back in 2020. Of course, anybody who bought on that signal did very well for themselves. Even if they're just continuing to hold the metal, they're up very much on that. And of course, we had a big run up in the price of silver following that spike. But the point is here that silver remains very, very cheap. This is just, of course, the price of gold divided by the price of silver. How many ounces of silver does it take to purchase an ounce of gold? Silver, of course, we could see a drop. I see some folks in the chat asking how high silver could go. Well, silver could go to, I think, triple digits in the relatively near future once the Fed starts printing again. How low could it go? I don't know. I don't anticipate it's going to go that much lower, just like I feel like we've established a floor in the price of gold around 2,000 now. I think the price of silver is probably, floor has been established above or around $20, maybe higher than that. But, anything can happen in the short term. And if price of silver and gold drops significantly, then I would be looking to back up the truck basically at this point because, think about who sold at 2150. I mean, stackers, if you got out, I would say it's kind of a weak hand, someone who thinks that's a, good level to sell at. I think maybe the weak hands have been getting out of gold due to perhaps some of the volatility. We did have this drop down in October, kind of a head fake down to around 1820. I know sentiment was terrible then. And really, even just based on what I'm seeing among even the stacking community, folks who watch these videos, the sentiment seems to be very hesitant, very somewhat negative about the prospects for gold, how everybody believes it's manipulated and it's going to be hammered down. Now, of course, the thing about that is when I observe negative sentiment like that, even among my audience, who I would, say probably is more pro-metal than the average sampling of the population, it makes me think that we won't see the price fall much further, because if even stackers are getting kind of negative in their sentiment about gold, I mean, who's left to sell, right? People taking profits, maybe folks who bought at previous highs and wanted to take this opportunity to get out. But whoever's left, it's the strong hands, and the selling and the negative sentiment indicates that, the negative sentiment indicates that the selling may be exhausted at this point. And that's one of the reasons, just from my personal experience, that I feel like we are going to see the price move higher from here in the relatively near future. That, combined with the fact that the Fed is going to have to print trillions of dollars, I mean, that helps too. But the sentiment really is a huge thing here, because think about this. If stackers are not wanting to buy metal, I mean, when you start seeing the bottom fall out of the dollar and people get excited, that's when you want to start looking for a top, right? When stackers are saying, oh, gold's going to go, to $1 million, or gold's going to go to $100,000, gold's going to go to $50,000. When you hear people coming out with like a very positive sentiment, that's when you need to look out. That's when you need to think, okay, we're going to run out of buyers soon and the price could be coming down. But when sentiment is negative, and you don't hear gold talked about in the mainstream at all right now. You talk about gold to people, even though gold just hit a new record all-time high, overall, people are going to think it's kind of a weird investment. You might get mocked. You might get ridiculed. That's an indication that there are a lot of potential buyers out there, because when all those people who hold probably a lot of paper assets, they might hold U.S. Treasuries, they might hold a significant amount of cash. When the purchasing power of that paper begins to get eroded in a very significant way, they're going to start looking to gold and silver in a very serious way. And that's when we're likely going to see the breakout from this formation. And again, when that occurs, when we get a close above this trend line, we haven't had one yet. We closed very close to it, or right at it, on Friday, and then we surged above it in intraday trading, but we got smacked down below it. When we see the price of gold close above this top trend line, that's going to mean that the price is going very high indeed. We're probably going to see 3,000 gold in fairly short order from that point. We're not there yet. So, how long will gold take to do that? I don't know. The markets are anticipating that the Fed will begin cutting rates in March. So I think that's as good as a time as any. I hope that we have that long before the metals break out, because that's more time to accumulate metals, especially silver, at these incredibly undervalued levels. Because once gold breaks out of this chart and starts moving up, silver's going to go right along for the ride. Let's see. Zotang TV, thank you for the super chat. You got a question here. Can you simply tell me how much money 14 karat gold is worth per gram right now? I have a kilo looking to sell and want to get the correct price. Okay, let me do a little quick math here for you. Thanks for the super chat. So 14 karat just means that 14 parts out of 24 are gold. So you take 14, you divide it by 24. That gives you 0.583333 ad infinitum. And you can just multiply that by the spot price of gold, and I'll give you the per ounce price. So right now, spot gold is 2035. That means that 1 ounce, a troy ounce of 14 karat gold, should be around $1,187. Hope that helps. So if you want to divide, and if you want to figure out the per gram price, I'll do it for you real quick since you supported the channel with a super chat. And thank you to everybody who supports the channel, by the way. You would just divide that by, if I remember my metric calculations here, 31.1035, and that'll give you the gram price. So about $38.16 per gram for a gram of 14 karat gold, Zoteng TV. And I'll take this opportunity here real quick. Please smash that like button and subscribe to the channel if you haven't yet. I actually had a few people say they had been unsubscribed by YouTube. So check and see if you're still subscribed. Rob G. Sorry you're exhausted, buddy. I mean, listen, I've got some folks in the chat saying they're exhausted with YouTube silver content creators. Well, listen, man, if you need to take a break, like go for a walk, I don't know what to tell you. If we're creating stress for you, maybe tune out for a little bit. Maybe watch some of the videos that are not about current events and price movement. Watch some of the ones about, coin dates or something a little more soothing for you. Listen, I mean, markets aren't for everybody. If you're stressed out by holding gold and silver, I don't know what to tell you. I mean, I'd be more stressed out holding paper currency myself, but yeah, look, it's volatile. You can expect more volatility, by the way, moving forward. Hey, Yankee stacking in the chat. 2024, yeah, absolutely. It is going to be crazy for gold, and I believe silver will go along for the ride. I mean, just look at what's going on. You've got the ceasefire in the Middle East is over. You've got the war in Ukraine is looking not great for the Ukrainians from what I've seen. Funding about to run out for that. So either you're going to see some significant problems there or you're going to see the U.S. pour more printed currency into that conflict. I mean, let's look at this. This is the U.S. national debt clock. You want to talk about something that stresses me out. It's not YouTube creators talking about gold and silver. It's the fact that the national debt just hit $33.88 trillion. That stresses me out a little bit. That's part of the reason why I feel less stressed holding gold and silver in my physical possession. But look, I mean, listen, some of this stuff is kind of doom and gloom, but I'm not trying to be overly pessimistic. I'm just, observing what's happening. Thanks again, Zoteng, for another super chat. Thanks everybody who supports the channel. Yeah, hey, Yankee, say hi to Tim for us. So, yeah, we're on the verge of a major conflict. We've got this shaping up for years now. The global south, the BRICS nations, they're expanding. They're de-dollarizing. The Fed is going to be printing vast amounts of currency, likely, in 2024. Markets are beginning to wake up to that. So, listen, I don't have a crystal ball. I can't tell you where the price of gold is going. However, I will say this, that my forecast is, based on all of the information available, that I think it's highly likely we'll see the price appreciate. And I think that holding gold, puts the odds in your favor. And could the price of gold crash? Of course, anything's possible. Listen, you can't time markets. It's not something that you can do. But if the price of gold drops, I'll buy more, because one thing that's guaranteed, the US dollar is going to continue getting devalued. The Fed tells us that their goal is to devalue it by 2% per year. Of course, they're exceeding their wildest expectations when it comes to the real devaluation of the dollar, but that's the game plan, and they're devaluing it a lot faster than that right now. So, are the odds of gold crashing higher than the odds of it moving higher? I don't think so. That's why I'm going to continue to stack. I haven't sold any of my metal. I haven't panicked. I'm not stressed out about it. I just keep stacking. Like, that's the game, right? The Fed and the economists and the powers that be, the government, they play their game. They create a lot of money. They spend it into the now. They borrow it from the future. They perpetuate wars around the world to enrich the military industrial complex. They borrow the money to do so. And, inflation is the inevitable outcome of all of this. And I don't see this game changing anytime soon. So that's why I'm still getting into gold. And this chart, from a technical standpoint, is enormously bullish. The fact that we just had this huge breakout in the price of gold is indicative that there's a lot of interest in gold as a safe haven. Central banks around the world are stacking the stuff like crazy. China is stacking the stuff like crazy. Why do you think they might be doing that? I mean, it doesn't take a genius to figure out what's going on here. The plan ultimately is a de-dollarized global economy, a de-globalized economy, and possibly return to gold as a currency in the very long term, or as a long term, as a store of value and as a international monetary standard, possibly, because all of these fiat currencies are just in a race to the bottom. I mean, the amount of debt globally is completely out of control. There's no way to pay any of this debt back without massively devalued currencies. And it's like, Ray Dalio pointed out in his recent book, I forget the title, the most recent one he wrote, where he points out that of all of the fiat currencies that have existed over like the past century, something like 80% of them have completely gone away, and the other 20% have been significantly devalued. I mean, just look at the price of gold since 1971, when the dollar convertibility was ended. I mean, gold was $35 an ounce. Today, it's 2,100, or it was last night. That gives you an idea of how gold is a store of value. And people say gold isn't an inflation hedge. Like, well, I mean, it's done a pretty good job since 1971 of preserving purchasing power. And yet, again, back to the sentiment thing. I mean, think of all the things that people are distracted by now, all the assets that have been inflated into these enormous bubbles since 2008, and even more so since 2020. Cryptocurrency blowing up. I mean, Bitcoin's been moving recently. Of course, a lot of people want to talk about Bitcoin right now. It's still well below its all-time highs. Gold is near an all-time high, and yet, why is nobody talking about gold? Well, it's because it's the real serious competition to the dollar. So the name of the game is to keep a lid on it. But ultimately, manipulation, however much it exists, nobody knows for sure. I know a lot of people are convinced that there's like some guy in a building somewhere that every day sets the price of gold. I don't think it's quite at that level. But, there are some shenanigans, and there's certainly a psychological war, a psyop against gold. I mean, you hear Ben Bernanke talking about how gold, the only reason central banks hold it is because it's tradition, right? I mean, he knows better, but that's the message that they want to send. But the sentiment against gold is intentionally negative. I mean, the mainstream media just lampoons you if you talk about gold. They barely mention it, really. Maybe it got some attention with the record high last night. I'm not 100% sure. I don't watch mainstream television too frequently. But, the sentiment is going to shift. And when it does, all that money that's been flowing into all these other giant ballooning assets, tech stocks, AI stocks, cryptocurrency, all the bubbles that have been inflated, that money will be flowing into the precious metals. That's my beliefs. It's my forecast. Of course, look, I'm not telling you what to do with your money. I'm not a financial advisor. This is just what I'm doing with mine. I mean, I've got skin in the game. I've been stacking gold and silver for years. I'm going to continue doing so. So again, if you want to go buy Bitcoin, if you want to stack up Pop-Tarts somewhere, you want to invest in whatever, do it, please. I mean, I'm not telling you what to do. I'm always open to, constructive criticism and conversation, but gosh, the sentiment in the comments is very negative, surprisingly, here. And I think that, again, that's indicative that we are on the verge of a big move up. You want to buy an asset when it is unloved. It doesn't do you any good to wait until the big move happens and then get into it. Then you're just a bag holder, right? And it's very possible that gold and silver will be heading into a bubble at some point. And that'll be the time to unload it, right? I mean, what you'll be unloading it for, I don't know, maybe fiat currency. Probably don't want to sit in that for too long once gold is bubbling, because it means that the currency could end up being worthless. But you maybe trade it out to some other productive asset that becomes undervalued at that time. But I think it's pretty clear that gold and silver, especially silver, are the undervalued asset at the moment. And that's why I'm going to continue to accumulate them. And the smackdown today, I mean, that's great news, I think. As I mentioned last night, when I did the live stream when the price was higher, I said, I hope that the price does decline in a significant way from here. I hope we get a pullback, because it sure would be nice to get another chance to buy it. And look, I know that there's a lot of you watching who are in the same boat as me. I mean, I know people out there get it, that they say, well, I wish we'd get a pullback so I could buy more. But a lot of people get kind of emotionally invested and stare at the spot price all day, I think. And, when it comes down, the sky is falling. When it goes up, they think that it's just, immediately going to be attacked by manipulators. And there's going to come a day, I tell you, when the gold price does close higher than 2100 and it's off to the races and we're not going to see a smackdown. We're just not there yet. So hopefully this consolidation lasts a long time. I think that 2024 is going to be the year. That's the year that the Fed is going to begin easing the long-awaited Fed pivot, the long-awaited Fed cuts. They're going to be forced by a collapsing economy, and that's when we're really going to see gold break out. Could it happen before then? Yeah, absolutely. Like tomorrow, you could see Iran catch some cruise missiles in its oil fields, and that'll be it. I mean, the price of oil will shoot up. The price of commodities across the board will soar. So there's plenty of things out there that could occur. I mean, it was yesterday, I think, that U.S. CENTCOM issued a message saying that they had intercepted some drones fired from Yemen, that Iran was behind it, and that the U.S. would be willing to do, whatever it takes to stop that from happening. So, interpret that as you want. You got folks like Lindsey Graham out there constantly trying to stir the pot and evoke a larger conflict here. So, there's a lot of things that, or you could see a bank collapse. That's another thing. You could see, a bank run, maybe a bank comes out and says, hey, we were forced to sell some of our low-yielding treasuries and take a big loss on them, and then you get a flight from the bank. I mean, this is always something that can happen as well. A lot of banks are insolvent right now, so who knows? Listen, anything can happen. Things are guaranteed to be volatile moving forward, so I don't give financial advice, but the way I'm looking at this, I'm not getting nervous about this. I'm not getting shaken up. I'm not worried about the prices of gold and silver dropping. If they do, I'll say great, and I'll convert some more fiat into metals at a more favorable price. But there's no guarantee that that's going to happen either. And I would be cautious personally about waiting for, that big pullback, which may never come, because that means you could miss the big breakout. Because with something like gold and silver, I mean, you're really going to be a lot better off being early rather than being late. So that's really all I got for you today. Just remember, national debt headed towards $34 trillion. Do you want to be in paper? You want to be in gold? Personally, I want to be in gold, silver, physical, tangible, hard assets. That's what I'm doing. So let me know what you think in the comments down below. Thanks for tuning in today, everybody. Don't forget to smash that like button, share this video on social media, and I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker, out.